All right, staying with the transports, Dow Transports, they've outperformed the market since the election, but they've underperformed during the first trading days in December. You can see right here, down about 2% yesterday. However, a number of transport companies tell me they are seeing freight volumes and rates move higher. That's largely due to a pull forward of imports into the U.S. ahead of potential tariffs. So take a look right here. This is some rail data showing some of the pull forward, with volumes spiking double digits in recent weeks. That last one a bit elevated because the comp is against Thanksgiving of last year, but still, you can see double-digit moves in recent weeks. I also spoke with Dave Bozeman, CEO of C.H. Robinson, the largest freight mover in the China to U.S. lane. He tells me the company has seen a tariff pull ahead in recent weeks. He told me in part, this is a quote, "We're working with our customers and pulling some product forward based on tariffs, but some are just continuing to move products in the same lanes." I also spoke with officials from the port of Rotterdam in the Netherlands. That's the largest port in Europe. They also say that companies are racing to export to the U.S. ahead of any potential tariffs.
There is a general concern that those tariffs will definitely impact the supply chain. The customers in general are preparing with shipping more goods and making sure they can benefit from a non-tariff related situation.
And here to look at the impact of potential tariffs on the U.S. supply chain is Ariel Rosa, senior analyst covering transports for Citi. Ari, good morning. Great to have you here.
Hey, good morning, Frank. Thanks for having me.
All right, so hearing from some really good sources, obviously the CEO of C.H. Robinson, also the Port of Rotterdam, that we're seeing that either, pull ahead or push ahead, I guess, if you're over in Europe. What does that mean for the U.S. supply chain, and what stocks could potentially benefit?
Great question, Frank. So, we're really operating in this environment of policy uncertainty right now, right? Where, everyone's just kind of sitting around waiting for the next administration and to see how serious they are about these tariff threats that they've spoken to rhetorically. But, with Trump, it's always a difficult thing to know what's real in terms of the rhetoric versus what's actually going to be put into practice. As you mentioned, it has resulted in this pull forward of demand, and that probably results in some strong fourth quarter results out of a handful of carriers. If we look at, for instance, Union Pacific, we've seen a real uplift in their intermodal volumes, which are really that kind of consumer product coming into the West Coast ports, and a lot of that is Asian merchandise coming into the United States. That's really been the target of Trump's ire, and so certainly you've seen it there in Union Pacific. You've seen it to a lesser extent for the East Coast rails, and you've seen it a little bit in trucking rates. Now, the trucking market is definitely still weak, but you have seen a little bit of a temporary uplift in some of the rates as shippers perhaps prepare for that uncertainty going forward.
Sorry, I want to go to two stocks that a lot of analysts, including you, have pointed out are very sensitive to the idea of tariffs. UPS and FedEx, obviously two of the most notable names in the transport space. We're going to show their performance since Election Day. This idea of this pull forward, do they actually benefit from this? And FedEx in particular, do they benefit on the parcel and where they move B2B goods? And do they also benefit on their trucking side, or is it simply on the B2B moving goods with the pull ahead?
It's a great question, Frank. So, UPS and FedEx, to some extent, are some of the more complicated stories in our coverage with regard to tariffs. Because on the B2B side, which is really some of their most profitable business, that stands to benefit if we get this boost in domestic manufacturing activity that a lot of people are looking for. Alternatively, clearly UPS and FedEx have a lot of exposure to cross-border shipments. That's really at risk if some of these tariffs come through. And so, generally speaking, we're a little bit more cautious on that from a near-term perspective. That said, what we do like with regard to FedEx and UPS is that both stocks are pretty cheap relative to our overall coverage. And so we have buy ratings on both FedEx and UPS. We think they're worth taking a look at, but we are a little bit cautious because this uncertainty is still hanging out there. And so until we kind of get to the second half of next year, I think we're still a little bit cautious on where that goes and what's the best way to play that.
All right, we're a little bit short on time, but one other thing I have to ask you about, a potential strike at the East and Gulf ports. Over the recent days, both sides in that dispute, the port operators and the union, have put out some statements that seem to be indicating that they kind of have their feet dug in the sand. Is that something that a lot of these companies that you cover are worried about? Is that something that you think investors should keep their eye on?
Absolutely. It kind of feels like we're living in Groundhog Day here. The East Coast ports obviously had a threatened strike a couple of months ago. Now we're doing it again. And that also, frankly, is probably part of what you're seeing in terms of the pull forward of volume. It's hard to see how this doesn't get resolved at some point, but now we have a lot more political uncertainty in that mix. Whereas previously, I think Biden was a little bit more willing to be aggressive. Now he's probably going to step off a bit. So this could drag on a little bit longer and be a little bit uglier than what it has been in the past.